There is a number sitting somewhere in your accounts right now. A number you've looked at so many times it no longer feels like a choice. You know the one. The payment that leaves before you've had coffee. The deduction that moves before you do. The charge so familiar you've stopped reading it on the statement because seeing it too clearly would require you to do something about it. And here is what almost no one tells you about that number. It isn't just a payment. It is the result of a very specific kind of conditioning, one that didn't happen by accident and didn't happen quickly and almost certainly didn't feel like anything was happening to you at all. Most people believe that financial commitments are decisions they made, rational, voluntary, freely chosen. They sat down, considered the cost, weighed the value, and said yes. That's the story. That's what it feels like from the inside. But there is a different story. One told from the outside, from the architecture of the system itself. And in that story, the word choice looks considerably different. What if the financial behaviors you repeat every month, the automatic payments you accept, the minimums you make, the subscriptions you forget to cancel, what if those weren't simply habits you formed, but responses you were shaped into, carefully, patiently, and at scale? That discomfort you feel right now, the small resistance in the chest, that is the beginning of actually seeing something. Picture a Tuesday morning. Not a dramatic one, not a crisis, just a Tuesday. The kind that starts like most of them do, with a phone picked up before full consciousness, a thumb moving through notifications, a brain still assembling itself from sleep. Somewhere in that phone is a banking notification. A payment has been processed. An amount, a merchant name, a timestamp. You read it the way you read the weather, as information that simply confirms what was already going to happen. You close the notification, you keep scrolling. Later, at a desk or a counter or a table, you open a banking app. The balance has moved. You look at the number for a moment, not long enough to analyze it, long enough to register it, and then you close the app and return to what you were doing. This is not negligence. This is not irresponsibility. This is what financial life looks like when the architecture around money has been designed to require the minimum possible attention from you. And the minimum possible attention is exactly what the system needs in order to function. Watch the behavior more carefully. There is someone checking out at a grocery store, topping a card with the automatic speed of someone who has done this thousands of times. There is someone approving a recurring charge on a streaming platform they haven't opened in 6 weeks because canceling requires more friction than continuing. There is someone making a minimum payment on a credit card, not because they planned to, but because that number appeared pre-filled in the payment field, and moving it felt like disruption. In each of these moments, there is a human being interacting with a system, and in each of these moments, the system is doing something the human being is not fully conscious of. It is reinforcing a pattern. The pattern is this. Money moves away from you on a schedule that someone else controls, and your role in that movement is to not interrupt it. You don't experience this as control. You experience it as convenience. That distinction is not accidental. Here is something worth sitting with slowly. Every financial behavior that feels automatic has an emotional need underneath it. And every emotional need is, somewhere in the architecture of modern banking, a lever. Consider the behavior of setting up automatic bill pay. On the surface, responsibility, efficiency, the rational elimination of late fees and missed deadlines. You are, in the common framing of it, being a competent adult with your money. But underneath that behavior is something quieter. There is anxiety about forgetting. There is a specific discomfort with uncertainty, with the possibility of missing something, with the exposure of human error in a financial context where error has consequences. Automatic payments solve that anxiety completely, and they solve it by transferring control of the timing, the amount, and the initiation of payment away from you and into a system. You get relief. The system gets regularity, and regularity at scale is extraordinarily valuable, not just for logistics, but for something more fundamental. Predictable payment behavior is the basis on which financial institutions model risk, extend further credit, and build the kind of relationship with a customer that makes the customer feel stable while the institution grows. Now consider the behavior of making a minimum payment. It feels, in the moment, like management. You are handling something. You are not ignoring it.
The debt exists, you know it exists, and you are responding to it in the way the interface suggests you respond. What the interface does not announce is that the minimum payment was designed by a team of behavioral economists, that the specific number shown in that field was tested across thousands of customers to identify the amount most likely to be accepted rather than increased, that the existence of that number, that visible, pre-calculated, seemingly reasonable number, is itself a sophisticated piece of behavioral architecture meant to prevent you from paying more. Not because they don't want you to pay, because the most profitable version of you is the one who pays, slowly, consistently, indefinitely. You are not being managed, you are being maintained. The emotional experience of security, of being in control of something even partially, is precisely the feeling the system needs you to have in order to continue. What is actually being built here is worth looking at without judgment, because the system is not malicious in the way people sometimes describe it. It does not target individuals. It does not make personal decisions about anyone's suffering. It operates according to a logic, and that logic is the logic of continuity. The fundamental goal of a modern financial institution is not to solve your financial problems. The fundamental goal is to establish a relationship with you that generates revenue for as long as possible at the lowest possible cost of acquisition with the highest possible degree of behavioral predictability. The word relationship matters here because a relationship implies mutual benefit, implies choice, implies the possibility of ending. And the banking industry has spent considerable resources making sure that the relationship feels like all three of those things, while systematically reducing the friction that would make any of them easy to act on. Think about how the credit system works at its most basic level. You borrow, you repay. As you repay, you demonstrate reliability. That reliability is encoded into a score. That score becomes the basis for new offers, higher limits, lower rates, greater access. The better you perform within the system, the more integrated into the system you become. This is not a trick, it is a design. The design creates a feedback loop in which compliance is rewarded with expanded access. Expanded access creates new dependence, and new dependence generates new revenue. The customer who manages their accounts well is not freed from the system, they are welcomed deeper into it. And at every stage of that deepening, the emotional experience is positive. You feel trusted, you feel capable, you feel like you have earned something because you have. You have earned a larger role in a system that benefits from your participation. The anxiety built into this architecture is not random either. The financial industry has a precise understanding of the emotional states that make people most compliant, most likely to accept a payment plan, most likely to say yes to a refinancing offer, most likely to consolidate rather than exit. Stress is one of those states. Confusion is another. The combination of stress and confusion, produced reliably by most interactions with complex financial documents, produces a customer who wants someone to tell them what to do. And the system is always ready to tell you what to do. The someone offering the plan, the consolidation, the relief, is the same institution that structured the complexity in the first place. This is not evil. It is a system operating according to its own internal logic, perpetuating its own conditions for survival. The same way a living organism maintains the environment it needs to live in, financial systems maintain the psychological and behavioral conditions they need to grow. You are not a victim of this system. You are, in the technical sense, a variable within it. There is a shift that happens when you stop experiencing financial information as personal and start experiencing it as structural. It doesn't feel like revelation. It feels more like a small, quiet repositioning, like adjusting the angle of a lens until what was slightly blurry becomes slightly less so. You are looking at the same things, the bank statement, the credit offer in the mail, the interest rate disclosed in paragraph 14 of a document you signed 3 years ago, the pre-selected payment option, the urgency in the promotional email. You are looking at the same things, but now you can see the architecture behind them. When a bank sends you a letter about pre-approval, you now understand that this is not a compliment. It is the output of a model that identified your account behavior as a particular kind of profitable risk, someone reliable enough to repay and anxious enough for access to accept terms that primarily benefit the lender.
When a subscription service makes cancellation require 3 steps and a phone call, you now understand that the friction is intentional. Every additional moment between the decision to cancel and the ability to cancel is a moment in which a percentage of customers will abandon the cancellation. This is called churn reduction in the industry. In the experience of the customer, it is called frustration. Those are 2 names for the same thing, viewed from 2 different positions. When a credit card statement shows your available credit next to your current balance, the placement of that number is not neutral. It is a visual reminder that there is space, room to move into. The available credit is not information, it is an invitation. And the invitation was placed there by someone who understands that proximity to possibility changes behavior. You can now see the design and the presentation. This is not a conspiracy. Conspiracies require coordination and secrecy. What you are seeing is something more ordinary and more durable. Industry-wide adoption of practices that work. Practices that have been tested, refined, and standardized because they generate predictable results from predictable psychological states. The design is not hidden. It is simply not labeled. And now it is labeled. The minimum payment is a behavioral anchor calibrated to prevent excess repayment. The promotional interest rate is a commitment device that exploits present-day optimism about future financial behavior. The automatic renewal is a friction architecture that leverages inertia. The overdraft protection you opted into, possibly without fully understanding it at the time, is a revenue product wearing the aesthetic of a safety net. None of these things are secrets. They are in the documents. They are disclosed. They are legal. They work because most people experience them as neutral features of how money works, rather than as deliberate structures that shape behavior and directions that serve the institution more than they serve the customer. You are not most people anymore, not because you are exceptional, because you are paying attention. There is nothing to be angry about here. Anger would require a villain, and what you are looking at is not a villain. It is a system, and systems do not have intentions. They have incentives. And incentives over time produce behaviors, and behaviors produce architecture, and architecture produces the world you navigate every morning when you check your phone before you are fully awake. The question is not how to escape. There is no outside to step into. The mechanisms of modern financial life are so embedded in the infrastructure of daily existence that escape is not a meaningful concept here. You need accounts. You have obligations. You live inside an economy that is denominated in these systems. The question, if there is one, is quieter than that. It is simply, can you see it now? Because there is a specific kind of freedom that doesn't require you to leave anything or change anything immediately or dramatically. It is the freedom that comes from knowing the difference between a choice and a conditioned response. From being able to look at a payment that leaves your account every month and genuinely ask whether it is something you decided or something that was decided for you gradually over time by an architecture you were never fully shown. That question is not comfortable. It doesn't produce a plan or a resolution or a feeling of momentum, but it is honest. And honesty about the structure of a system, even a system you cannot exit, is not nothing. It is, in fact, the beginning of a relationship with your own money that belongs to you, rather than to the logic of an institution that needs you compliant and continuous and slightly too busy to read paragraph 14. The system continues. And now so do you, but with your eyes open. Thank you for staying with this to the end. If something in here landed differently than you expected, if something felt familiar in a way that's worth sitting with, you might find that the next video here goes further into one of these threads. The subscribe button is there if you want to follow that thought across time. No pressure in either direction. And if something here brought up a question you haven't been able to answer before about a specific behavior, a specific system, a specific thing you've accepted without quite knowing why, leave it in the comments. Those questions tend to be more interesting than most of the conversations happening anywhere else. Until then.